That note, let's welcome on board Kunal as well and talk about what he's making of the market. Kunal, hi, morning. I don't know what to begin with, the Nifty or the Bank Nifty. Let's start off with the Nifty Bank because that's the one that pushed the Nifty as well.
Yeah, I think it was a very strong comeback for the banking index, and I think more predominantly the large cap banking names, private sector banking stocks. And I think I don't remember when we'd seen this kind of participation from large cap private sector banking names alone, and that too devoid of the support from the other banks, the PSU banking stocks, etc. So I think it was a very strong and a fierce comeback for many of the banking names. Now, the evidence in terms of the data points suggests that there's been a very strong build-up of long positions for both the indices, Nifty and Bank Nifty particularly. In fact, the net difference in the open interest for the June to July series was almost like a 40,000 contract for Bank Nifty and 30,000 contract for Nifty. That itself, indicates that there's been good amount of buying, strong rollovers which are happening for both the indices going into the July series as well as in the expiry week for the June series. So I think on the back of this, I would probably believe that this trend should sustain for indices. What we've also seen is that both the indices have managed to break past above their previous resistances. So 23,500, that's been broken for the Nifty, and 52,000 has been broken for the Bank Nifty. So now we are looking at a much more fresher, based support for both the indices. And I think the previous resistances would now act as a strong support for the Nifty and Bank Nifty.
Nuresh, what about you? How are you analyzing the setup, and how will you trade the benchmarks now?
So, like I've been maintaining for the last many days, that private banks is where the new leadership is coming in. And yesterday was the clear evidence of that. We finally broken out above 52,000 on the Bank Nifty. We had been sustaining well above the breakout levels on the Nifty Private Bank Index. And now, apart from Kotak Bank and IndusInd Bank, names like ICICI broken out into a new all-time high, Axis into a new all-time high. HDFC Bank is just 2% away from an all-time high. So structure is still there for continuation of this move. Now going forward, the way to trade this is to keep buying on dips on the Bank Nifty or look at private banks as such. So the buy on dips continues. Stop loss will now shift to below 52,000 on the Bank Nifty. And similarly, say if a breakout in ICICI has happened at 1170, now the stop loss shifts to around 1170. So the last high will now act as a support going forward. So the structure is positive. The leadership is in private banks. On the mid-cap side, it is auto ancillary. So we are starting to see new sectoral rotations which are doing well.
If you like this video, then like, share and subscribe to ET Now.